Billy, I know you haven't visited the ghost towns of empty property. Explain how in any nation you can have microeconomic incentives that allows for miles and miles of empty skyscrapers that leads to the collapse of Evergrande.
Tom, part of China's development strategy has been to build up the property sector because the financial instruments in China are so primitive that people really don't have a way of saving. And so buying property is really one of the most important things that Chinese families do. And right now, what we're seeing with the potential collapse of Evergrande is the question facing policymakers in Beijing is Evergrande systemic? Is it too big to fail? Is it their equivalent of AIG? And so what we're going to see is the potential for Beijing to step in, if not directly, certainly indirectly, to take on some of that debt and reassure the people in China that their property is safe. And that's really critical to boost consumer demand, which is flagging with the latest data.
My working number as an amateur is $200-300 billion. Who knows, plus or minus 100 billion. Who's counting? How do they do that? Do they just print more renminbi?
Well, actually, Tom, this is a municipal problem, right? The property stuff is going to be in the hands of municipal government. And now the question is, if the municipal governments don't come in to support or cannot support because they're already overextended, that's where the federal government comes in, and that's where Beijing comes in. And that's sort of the sleight of hand that's going to be taking place. There's going to be a lot of smoke coming out of this affair, and it's going to be trying to reassure people that they don't need Beijing to come in. The property sectors are quite safe because Beijing has, for the last several years, been trying to cool off that property sector, been trying to develop the capital markets in China so that people will have other investment avenues other than property.